Hi guys, my name is Sam Saggers, Director of Positive Real Estate. I want to welcome you to some tips and strategies on how we should invest in today's ever-changing Australian property market. The market works in mysterious ways. There is so many elements to understanding how to make money in real estate that we try and make it simple by asking people to come along and inviting people to come along to our property information nights. Of course, macro and micro markets are ever changing, and sometimes it's easier to look back on a market than it is to look forward or gauge ahead on what is going to happen. Do we all have one of those friends who, I guess, bought a property in an area and sold it too soon and didn't make money? Or do we all have that sort of family story where one of our family members could have, would have and should have bought a property in a certain marketplace but didn't, and within a short period of time that market took off and doubled in value and we didn't make the money? We've all got one of those stories. I've got a shocking family story when it comes to missing a great opportunity that my parents always reinforced to me. Guys, the macro market is driven by so many elements, including key drivers. Now the key drivers, there's 6 of them, and if you understand them, you can make some money. So look, here's a tip: 6 key drivers from a macro point of view. Okay, yield. We want to, I'm going to use a different pen, but we want to follow the rental returns. Okay, the higher the returns, there's an old saying in real estate: capital growth follows rental returns. Okay, supply and demand. Okay, can we control where we choose to invest? Absolutely. Now there's some areas or some questions you need to ask when it comes to land release. Am I investing in an area where there's going to be large releases of development and large releases of land? Okay, if there's too much release, then your supply and demand doesn't work for you. Of course, there's areas around Australia today where there's limited supply of housing, and these are the areas we need to target. Okay, economics. Okay, you have economics of an area. Now, what happens in Australia? Capital growth tends to follow wage growth. Okay, so wouldn't it make sense to invest in an area where there is huge amounts of industry and huge amounts of wage growth opportunity? Okay, and so some people like to follow the CBD markets, some people like to follow the mining markets. There's rationale behind it all, but economics is a key drive to understanding from a macro level where we should invest in today's ever-changing real estate market. Infrastructure is the next one. Infrastructure is really important. Okay, right now today there is infrastructure occurring, or massive amounts of infrastructure occurring around the country, billions of dollars being spent by government and private enterprise. Of course, there's areas in Australia where that's not occurring. I wouldn't want to put my money in those areas. Okay, if the area isn't developing and growing, your house price isn't going to grow with it. So follow the infrastructure. It's a key injection for capital growth, and it makes you a lot of money if you know where to follow or what to follow. Demographics. Demographics is an interesting one, and I always link demographics to tenants. Okay, quite often high disposable incomes are the best for rental returns, and we see that around the country. Of course, buying real estate in areas where wages aren't growing or disposable incomes aren't occurring, and the demographics of those areas may actually limit some capital growth. For example, retirement communities or tourism communities are suffering a little bit at the moment because the demographics of the people there aren't actually high disposable incomes. So it's really important. And the final one is population. And population is vastly important. I rather invest in a smaller community with a higher population growth forecast than a bigger community which is remaining stagnant. Okay, if we found an area today with, say, 10,000 people, which is going to grow over the next sort of 3 or 4 years by 2,000 more people, do you think that's going to have a big impact on supply and demand of an area? Absolutely. There's some great cities around Australia where we can also invest from a primary city point of view. So you don't need to even go regional with some of this stuff. I know here in Sydney, there are certain local government areas that the growth forecast is said to be as high as 3 and 4%. So more people, more pressure on housing, higher rents. That's how the macro market works. Understand the micro market, I'd encourage you to come along to one of our property information nights and we'll drill down how to invest from a state level to a street level to a suburb level. Once again, I'd ask or I invite you to register for one of our property information nights. They're held all around the country and we'd love to see you there soon.